Welcome to ForexTV.com's PM Exchange. It's Thursday, March 6th. I'm Remy Hoki. Today I'm joined by Joseph Trevisani from FX Solutions. Good afternoon, Joseph.
Hi, Remy. How are you?
Good, thanks. Great to have you on the show today.
Thank you.
Well, let's start out today's interview by talking about the central banks. Earlier in today's session, both the BoE and ECB left rates unchanged.
Correct.
But after Trichet's comments this morning, we saw euro-dollar hit another all-time high. And the euro has been hitting record highs against both the U.S. dollar as well as the sterling.
Correct.
So if you could start out by telling us about your concerns for recent euro gains.
You know, traders have now taken an extremely negative and also almost institutionalized in the past 2 weeks, an extremely negative view of the dollar. You can say, of course, that it's justified because there haven't been any good statistics out of the United States. If we look at the central bank rates, the Fed is going to cut rates again by 50 points at least, I think, this month, probably on the 18th. The ECB made it very clear that they are in a neutral stance, and you know what? That's what they meant. And none of these things are supportive of the dollar. However, they're also not very different than things were a month ago or a month and a half ago, before this very strong anti-dollar mood took place and took hold. So I don't think we're really seeing anything more here than a simple fact that the speculative urge has really taken hold in the anti-dollar camp, and it's winning. So if you're trading, and after all, we have to remember, I mean, traders' business in the markets, all of them, from retail traders all the way up to bank traders, their job is not really to establish an equitable level for the dollar against the euro. Their job is to make money. And clearly, the way to make money trading now is to go long the euro. And so that's what we're seeing.
Okay, Joseph. So speaking of making money, tomorrow morning in the North American session, we have key data coming out, including the employment situation report. So first, if you could give us your forecast for non-farm payrolls and also for the unemployment rate.
Sure. I think non-farm payrolls is going to be pretty poor, and it won't matter really if it's good, and I don't think it will be. It'll probably be, I'm looking for probably between 0 and 15,000 in jobs, maybe a little more, but not much more. I think we will get a revision up in the prior month, which was, I think, down 23. We'll probably get up to about 40 or 50. It'll get closer to trend, but the trend has been clearly down. You know, in all of the comments, there are serious problems with the American economy. It has clearly slowed. Job production has slowed. Consumer spending has slowed. Inflation is up. These are not good things for an economy. And the trends are perhaps more, the direction of the trend is perhaps more worrying than the actual fact, the actual numbers that you're seeing right now. Nevertheless, none of them are actually pointing towards dramatic collapses. The dollar is exactly behaving as if there was a dramatic collapse right around the corner. For the unemployment rate, I will probably see a bump to 5 or 5.1%. Again, these are not great numbers, but they must be put in context, both historical and where we've been.
Well, Joseph, this week has been heavy on the U.S. data front, and we've been seeing plenty of risk aversion in the equity markets. We saw the major indexes close down below 2% on the day. So given that we're seeing a lot of risk aversion and dollar-yen falling below 103, if you could tell us the story right now we're seeing in dollar-yen and also the yen crosses.
You know, it's interesting. I think the yen crosses that we noted earlier in the year, the yen crosses had been highly speculatively charged. I mean, a lot of people were doing in the yen crosses late in last year and probably earlier in this year a little bit too, what they're doing in the euro now. I think, in fact, the hot money, the money that's chasing trading profits, has switched over to the euro. So, relatively speaking, the euro-yen has actually calmed down a bit. The dollar-yen is doing two things. One, it's suffering from some fall in the euro-yen because there are still some long-term positions out there, and there is still, of course, as you noted, risk aversion with the stock markets, and not just the American stock market now. It hasn't hit the news lately, but the Asian stock markets are not doing well at all. They're taking the Nikkei has some serious problems. So there is risk aversion in that, and that, of course, is weighing on the dollar-yen through the euro-yen. But you also have just plain old dollar weakness, which is definitely affecting the dollar-yen. There's no reason that it wouldn't.
Okay. And And another central bank that announced its rate decision was the BoE today, and they stayed on hold at 5.25%. But we saw a cable gain above the $2 handle, and it has managed to stay there and not pull back as we end the end of the New York session. So if you could tell us what the story is there and what your forecast is going forward.
Well, you know, I think the story there is twofold. The first part, of course, is the easy part, and that's just dollar weakness, and it's trading against the dollar, so therefore it's going to benefit when the dollar weakens. You're going to take the cable up. But the other is, until quite recently, there had been pretty serious speculation, pretty serious pricing for a BoE rate cut today. That only started to wane about 2 weeks ago. So part of that is a reaction is against the remaining speculative interest in that event. And so when we didn't get it, you still have the push above. It's now looking, now that we didn't get it today, and actually no one expected it today, but that, as I said, is a recent innovation. Whatever cuts are coming are likely pushed off. So again, once you have the fact, you move to further speculation, which is for another hold, and so the sterling actually strengthened on that.
Okay, and now that we've covered most of the majors, let's focus on the dollar-bloc currencies. We had central bank announcements from the BOC, RBA, as well as the RBNC. And they had different, very divergent monetary policy decisions this week. But what's your strategy for the respective currencies? Well,
this is an interesting one. I mean, I saw somebody sent around a note, one of the analysts that I talked to, talking about central bank policy and the dollar. And it was a very simple graph. It's just a very simple table. It just showed all of these central bank rates, all of which are either been raised or much higher than the dollar, and than the Fed rate, and the Fed rate of 3%. And at the bottom it said, what else do you need to know? For most of the currency pairs involving the dollar, that really is all you need to know. You have a divergence which people thought we were beginning to see the end of, either because the ECB and the Europeans would have to begin lowering rates because they would have to be moving to protect their economies, which would be starting to slow because of the United States, or in addition, you would be seeing the Fed getting towards the end of its rate cycle. These things were current in the expectations about 2 months ago, up until probably about 2.5 weeks ago. That's changed. And so as far as the comparisons and what you expect from the dollar and the central bank rates, that table tells it all. Until you get the expectation, at least, that these things are going to change, you are not going to get a recovery in the dollar. And that goes across all those currencies.
Okay, Joseph, thank you very much for your insight. And as always, pleasure having you on the show.
Thank you very much, Remy. Nice to be here.
Thank you. This has been your Forex News with Joseph Trevisani from FX Solutions. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks plunged today with the Dow Industrials ending lower by over 200 points. The Nasdaq and the S&P 500 also took a hit, falling over 2% on the day. Wall Street jitters mounted with more evidence of renewed credit concerns and news of rising home foreclosures. The Mortgage Bankers Association said the proportion of nationwide mortgage foreclosures soared to a record 0.83% in Q4 of 2007. In today's economic data releases, the Labor Department reported that initial jobless claims fell by 24,000 to 351,000. This was the biggest decline since December of 2006. Continuing claims rose to their highest in 2.5 years, while the 4-week average fell to 351,000. At the closing bell, the Dow Industrials tumbled 214.60 to end at 12,040.39. The tech-heavy Nasdaq fell 52.31 to close at 2,220.50. And the S&P 500 shed 29.36 points to end the session at 1304.34. Over in the fixed income market, U.S. Treasuries surged as investors fled equities and headed for bonds. The benchmark 10-year note was up with its yield down to 3.59% from 3.68% late yesterday. And the 2-year note rose with its yield down at 1.53% from 1.64% in the previous session. And taking a look at energy, NYMEX crude oil futures gained in today's session, soaring to an all-time high of 105.97 on the day. In a volatile trading session, crude saw a session low below $100 a barrel and a high that was only 3 cents away from the $106 barrel mark. Futures prices gained on U.S. dollar weakness and also due to geopolitical concerns over Colombia and Ecuador. April crude added 95 cents to end at 105.47 a barrel on the New York Mercantile Exchange. In other energy futures, April reformulated gasoline added 2.11 cents to close at $2.6532 a gallon. April heating oil gained 3.02 cents to close at $2.9733 a gallon. Meanwhile, the EIA reported that nat gas inventories declined in the latest week, down 135 BCF. The benchmark contract saw a session high of $9.815 per million BTU, but closed almost unchanged. April nat gas added 0.1 cent to close at $9.742 per million BTU. And also taking a look at precious metals, which declined across the board, gold futures pulled back after hitting an all-time high in the previous session. April gold fell $11.40 to end at $977.10 an ounce. In other metals, May silver fell 56 cents to end at $20.23 an ounce, and May copper fell 8 cents to end the session at $3.90 a pound. This afternoon, we're joined by Bobby Firestone, analyst at Aileron Trading. He'll weigh in on recent action in NYMEX crude oil and COMEX gold futures.
As we've all seen, the last couple of days of trading in metals and energies have been excessively volatile. Now, obviously, we have the the headline numbers: crude 105, crude 106, gold. I'm so close to 1,000, you can smell it. But looking at the action, looking at the excessive volatility, and what we're hearing about a lot of these long-only commodity funds just piling in, what we've seen from the Commitment of Traders report is to really back up the theory. The more I look at it, the more it starts to look like we're seeing a bubble form. It's okay. Yeah, you have the factors of the dollar continues to get beat up. I made a new low today. We're 73 on the dollar index. Okay, world demand is increasing, not at that big of a rate. Realistically, when we compare it to recent years, crude should probably be about $75, $80 a barrel right now. But we're seeing this tremendous out of alignment, and so I'm starting to think that we have to be looking for a big down move to be happening here as the bubble bursts. But remember, anytime we talk about a bubble, it can stay inflated longer, keep prices higher for longer than anyone ever actually thinks possible. But that's what I'm looking at here is bubble scenario.
That was Bobby Firestone, analyst at Aileron Trading, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.